Good Tuesday morning on Wall Street. I'm Yahoo Finance Executive Editor Brian Sozzi, and this is Opening Bid. Let's get after it. Here's what I'm tracking right now. After a big few weeks, including a bullish bet by billionaire Warren Buffett and favorable reviews of the new Gemini 3, Alphabet looks poised to hit a $4 trillion market cap for the first time, possibly right out of the gate today. AI darling Nvidia is getting hit on a report that Meta wants to buy a lot of Google AI chips. Not a good morning for CEO and founder Jensen Huang. Meanwhile, the narrative on retailers remains all over the map ahead of Black Friday this week. Best Buy lifted its outlook on the back of brisk entertainment product demand. The stock under pressure, though, as margins are soft. Abercrombie & Fitch didn't have a great quarter at its namesake brand, but the cheaper-priced Hollister did well. Shares are up on the results. And Dick's Sporting Goods is getting hit as it begins to take a wrecking ball to Foot Locker's operations, a business it bought recently for $2.4 billion. This comes as we got September retail sales data that showed Americans spent less than expected. Yeah, we're still digesting September data because of that government shutdown. All right, here to break it all down on Opening Bid, Larry Adam, Raymond James Chief Investment Officer, alongside Yahoo Finance senior reporters Inez Ferre and Jennifer Schomburger. Larry, let me get over to you here. We're still digesting some of this retail sales data. Do you care about data that was released or measures anything related to September at this point?
Well, I think it's good from a historical context, as you mentioned, but it is from September. I'm more concerned, what happens this week. You mentioned it. You have this upcoming weekend between Black Friday, the weekend sales, and then Cyber Monday. I think that'll give us a better indication of the strength of the consumer going into the back half of this year.
How do you see the consumer right now as we enter Black Friday, Larry? I mean, last week, Gap did okay, Old Navy did okay, Home Depot not so good. The results out today, Abercrombie & Fitch not so great, Hollister good. I mean, the consumer's all over the map here.
I think overall, though, it's a weaker consumer. First of all, I would look at what have sales been. And if you look at some of the comps, a lot of them are flat to slightly down. When you look at what the retailers are saying, you're seeing the consumer trading down, looking for opportunities, looking for deals, looking for bargains. You're looking at some of the home improvement companies. They're talking about their consumers foregoing or postponing doing some big projects. So I think the consumer is slowing, and part of that's because I do think that you're seeing a weakening of the employment conditions, and that's probably the biggest driver of consumer spending.
Jen, does this September retail sales data, and what we heard from retailers, where does that put the Fed as we get that December 10th Fed decision day?
Yeah, it is dated, but it shows that consumers did pull back. And the Fed has sort of been looking at a tug of war between, hey, what's going on in the job market versus the economy and consumer spending, which had been resilient. The fact that we saw consumption pulled back in the beginning of the third quarter in September, albeit a bit dated, as you guys are talking about, sort of speaks to perhaps the economy may have been weakening. Again, this is just one report. And as you're talking about, a lot of these retail earnings reports have been quite mixed, showing that consumers are still willing to spend on things that matter, but there are other price points that are just too much for them. So I think we have to take this report with a grain of salt and get more current data before we can get a real good picture of what the consumer is right now, what the economy is right now. But I think it does help the dove case for the Fed. It keeps a rate cut on the table for December.
Brooke, the consumer's just confusing the hell out of me. I don't even know any other way to put it. You have Best Buy results, people buying entertainment products, appliance sales. Appliance sales were down, so that wasn't good. Yet at Foot Locker, they're liquidating unsold inventory because nobody wanted to buy $100 plus sneakers. Like, totally confused here, Inez.
Yes, look, it seems to be that there is a bifurcated consumer, and the retailers are basically telling you that. Best Buy had good results, but that's because people have been upgrading their units, their TVs, their iPhones, etc. So, but then when you talk about retailers as far as clothing is concerned, they're more choiceful, they want more sales. And we have seen it over and over when we hear the retailers talking about the middle to low income consumer, and how you even have the higher incomes that are also trading down, so to speak. So we've seen it across the board, and we've seen the data over and over. And even Goldman Sachs just put out a survey this week talking about holiday spending and the bifurcated consumer, and that you really have the higher income consumer that are more optimistic, but you're looking at the lower income that are seeing more, they're being more choiceful, that are pulling back more. They're still spending, but certainly importantly, there is a bifurcated K-shaped consumer.
Larry, you know who is spending? These big cap tech companies. They're still, despite the hits in their stock prices, they're still out there spending billions of dollars to put AI infrastructure in the ground. Any concerns here on your part? And have you been buying the dip here in these AI stocks?
Yeah, I mean, we're still like the technology-related stocks, particularly the large cap, mega cap tech stocks. I think, first of all, when you look, even going into the future, when you look at earnings growth, you're still talking about above market earnings growth for all of next year. You know, from our lens, we're looking for those big cap names to grow their earnings next year 23% versus the rest of the market, which will be, you know, in the low double digits. If you look at the spending that you're talking about, I think that's a positive. Yes, you're seeing some volatility within the semiconductors, but that's not because of a lack of demand. That's just increased competition. So that's not, I don't necessarily view that as bad. I just think people are looking at other ways to be more efficient in deploying these types of capabilities that they're talking about. And then from a valuations perspective, keep in mind we were almost down 10% last week when you look at where they were from their recent highs. So I think valuations are still attractive. And going forward with the earnings growth that we're looking for, I still think there's an opportunity there.
Larry, when does this rally start to broaden out? I'm taking a look at next year. Is next year the year where the 493 other stocks in the S&P 500 finally get some more love on a consistent basis?
Yeah, I think that that's going to happen next year. And again, I agree with you with the broadening. I still think that tech will be a major part of that, but I do think you'll see broadening because we actually see an economy that's going to accelerate next year on the back of, you know, the one big beautiful bill that's going to put more money into consumers' pockets. So that should help the consumer when it comes to spending. A lot of the other things in that bill have to do with corporate spending, you know, the immediate 100% depreciation. That should help some of the industrial names. So I think you're going to continue to see a broadening out into other areas. I still favor the large cap space. And the reason I do that is because I think that's where you have more visibility in earnings growth next year. A lot of people have a lot of optimism when it comes to small cap, but I talk about that being rinse and repeat. That's happened the last 3 years with small cap names only disappointing. So I still prefer large caps even going in the next year.
Inez, I'm really locked in on this Alphabet story. And I made a note to myself a couple weeks ago when it came out that Warren Buffett was a buyer of Alphabet. My note was very simple. When Warren buys something, he just knows. I mean, he knows. I mean, this guy has the best access to anything, humans, information, whatever it is. And since then, Inez, it's no small shocker that now Alphabet is out with favorable reviews of Gemini. That looks to be a winner. You had the new chip news. They might be winning chip business away from Nvidia. And then suddenly, now the stock might be a $4 trillion market cap company.
100%, and it is now the best performer year to date among the Mag 7. It's up more than 68% year to date. It has outperformed every other Mag 7 stock, including Nvidia, by the way. And as you mentioned, their TPU business that could rival Nvidia. I mean, that is the sort of interesting story that Nvidia, the market was so concerned about China taking away, getting ahead of Nvidia, and here we are out with Alphabet with these TPUs. That this is an interesting sort of a scenario when you talk about the rivalry now between these two companies. And as you just mentioned, Gemini, which has gotten better and better over the last several months, so the street is increasingly bullish on all of this regarding Alphabet. And I will mention that DA Davidson note that reiterates a buy rating. They're saying that this TPU plus DeepMind business of Google could be worth $900 billion. That's about 22% of the company's market cap right now.
And in case you're wondering out there, TPU stands for Tensor Processing Units. I mean, we got to just code this stuff in real time. Jen, over to you. How much does the Fed look at how much AI infrastructure is being built in this country? And where do they put that in terms of importance as they assess the economic outlook?
I got to be honest. I know we're all focused in the markets here on AI and that big tailwind, and it has been the Mag 7 that has really taken markets higher over the past few years and could for the next couple of years. But as far as the Fed is concerned, they are just watching the build out of data centers. They think it does lay the groundwork for economic growth, but they view AI as a long-term story. And yes, they're watching the markets as far as valuations. Yes, maybe they think there could be a pullback, and we've had one already to a very small extent. But it's not something that's on the front burner, something that is going to influence their decision making at this point. They look at it again as a longer term issue for the economy. Do they think it's real? Yes. Do they think it's going to have implications for the job market? Of course, and that ultimately will have implications for monetary policy, but they believe we're very much in the early innings at this point. So it's not having any impact on near-term monetary policy making.
So Jen, you mean to tell me Powell and his buddy John Williams aren't debating Nvidia versus Alphabet? That's not how these meetings go, is what you're trying to say.
No, I don't think so. I think they're debating the strength of the consumer versus inflation, how tariffs are working into the economy and pricing right now versus the strength of the job market.
Had to ask while you're here. Larry, let me get over to you. I don't want to sit here and just say on crypto, we've been covering it on the way down, and now I want to stop talking about it as it goes up. So Bitcoin prices have seemed to stabilize a little bit. What do you think about this move we have seen in crypto over the past few weeks? And are you concerned about more of a sell-off and that pressuring the broader market a little bit?
Yeah, so crypto is a real tough asset class for me. Again, as a fundamental analyst, there's no cash flow, there's no dividends, there's no income. So it's really hard for me to tell you what the actual value of crypto really is. I can't tell you if Bitcoin's worth, 200,000 or 2,000. And as you just said, the volatility has just been incredible. I mean, people forget that not too long ago, October 6th, it was up 34% on the year. It was over $125,000. Today, we're around 87,000. We're down 7 or 8%, year to date. So there's a lot of volatility there. When you have an asset like this, it becomes an asset class of sentiment, what people think about it. And what drove it higher earlier in this year was pretty much record inflows into that asset class or that particular investment vehicle. And more recently, you've all of a sudden started to see heavy outflows from that space. And that's really what's driving it. And again, I really can't tell you if it's up from here or down from here, to be honest.
Larry, if a client comes to you and says, Larry, look, I got a little more money in my pocket. I want to put it to work. They say, Larry, I want to hold gold or crypto. Where do you steer them and why?
So I would probably do gold, but gold as well has become an asset class of sentiment. Obviously there are some fundamentals in gold because, you can use gold for different commercial reasons. But of late, that's been another one that's been driven by sentiment. And I think if you look on the horizon, things like the potential for some of the geopolitical concerns coming off the table, like Ukraine, Russia, that could put some downward pressure on the price of gold here in the near term.
And as real
Brian,
quick here.
Just,
yeah, go ahead. Hop in.
I just want to say the one word that pops into my head when it comes to Bitcoin is speculative. And yes, we have a scarcity issue, right? There's only so many units that are going to be created, but it's only worth whatever the next person is willing to pay for it, right? This is not like a stock that is generating revenue and earnings. So I think it's important to keep that in mind. Whereas gold is a store of value. Is Bitcoin really? I don't know. I still think it's a speculative investment.
Jen, I'm going to bring to life an emoji I've used before. What is like those praying hands? There we go. I think you were on the mark there. Nez, last word to you here. What I don't like about this move in Bitcoin, it hasn't been that convincing off the lows. I mean, it seems like people are nibbling at it, but it hasn't been that burst back over 90,000.
Right. And the question is, has Bitcoin bottomed here? Is this going to turn into a V-shaped recovery? And most analysts are cautious about that right now. It does not seem like this bounce is that meaningful. There are some resistance levels that analysts are taking a look at when it comes to the next following weeks. But I will say that Sean Farrell of Fundstrat said, look, the media has turned very bearish when it comes to Bitcoin. So perhaps that's a counter signal, according to him. All
right, this roundtable is cooking with gas. We'll be right back with more analysis here. Straight ahead, it's a bull and bear battle on Oracle, and we offer up a sobering take on the country's affordability crisis. We'll be right back. Let's hit my stock of the day. That is Oracle. You want to get me excited in the morning? Then tell me two opposing views on a stock by two different Wall Street analysts are ready to read in my email inbox. Suffice it to say, I was jacked up when I woke up at 2:30 a.m. to see a bullish call on Oracle by HSBC and a bearish take on Oracle from D.A. Davidson. HSBC analyst Stephen Bursey thinks the street has grown too skeptical on Larry Ellison's Oracle. He thinks when the company reports earnings very soon, it will remind investors it's seeing explosive growth related to the AI infrastructure build-out. On the other hand, D.A. Davidson's Gil Loria says this, quote, "We were concerned about Oracle as soon as we realized OpenAI represented the entire increase in Oracle's backlog, and that has indeed come back to bite Oracle as shares are now trading at a lower price than before reporting earnings in early September. Let's get some hot takes from the roundtable. Larry Adam, Inez Ferrer, and Jennifer Schoenberger. Larry, what's the more important AI stock for you going into next year? Is it an Oracle or is it still Nvidia?
So again, I don't comment on individual stocks, but I think you have to look at both sides of it. I think the infrastructure is very important when it comes to both cloud, where you continue to see investment, because basically this is all about saving data, and then I think it's also about semiconductors and chip makers, because it's all about speed. So I think both of those sides or those industries should do well going into 2026.
Larry, do you think if we're having this conversation in 2030, and let's hope we are. I mean, I enjoy what I'm doing. I'm sure you do too as well. Do you think the technology, AI, will support the investments being now made by these big tech companies?
I do, because I think one of the biggest things that these tech companies are doing is that their margins are so healthy. They're double what they were, for example, back during the dot-com age, which means that they have significant cash flow, which means that they can continue to invest for that next great innovation in the technology space, which continues to build a moat around their businesses. And that's quite different from what you saw back during the dot-com age. The other thing that's important about these companies, the big ones at least, is that they're not one-trick ponies anymore. They don't have a software package or a hardware package. They have hardware, they got software, they got services, they have exposure to other industries within the market. So they have a lot more levers to pull to make sure that they have the longevity of their business plans intact.
Inez, what was it, September? Oracle, and we've been following Oracle. It's a legendary tech company. They come out in early September, blow minds with backlog that nobody has even seen before, especially from a company from Oracle. But since then, the stock has come under pressure. People have questioned that backlog number and how much it's tied to OpenAI. I mean, maybe everybody else is wrong. Maybe this is actually a good thing that Oracle has this backlog.
Yeah, look, HSBC makes a good point that there are definitely questions about how Oracle will be paying for all this AI infrastructure that is going to be building. And then the other question about the profit margin, the backdrop on that, because the AI business is going to have less of a margin than its traditional software business. But nonetheless, HSBC is saying those questions will be answered. They're saying in the next earnings call, there should be more clarity on this, but they're saying that this AI revolution for Oracle is just beginning. And if you take a look at what the street in general thinks about this, I mean, if you look at the stock right now, you're right, it's down 35% from its peak back in September. It's still up year to date, but you have 36 buys on this stock, 11 hold and 2 sell. So certainly the majority of these analysts consider this still a buy.
Jen, the main concern with this Oracle backlog seems to be the state of OpenAI. OpenAI has just connected itself to almost all of the entire tech sector with big deals, and they don't necessarily have the money, perhaps, to make good on all those deals.
Yeah, can I just say, hey, big spender?
Yes, you could. I love it. Do it again, Jen.
Hey, big spender. Yeah.
There we go.
No, because the consumer might be pulling back a bit, but to your point, these AI tech companies are spending like there is no tomorrow because they are trying to lay the groundwork for investment for the future. And I know we're talking about Oracle, but we sort of seen the story before with Meta, where they have increased their capex by a lot, and then they have turned in good results and the stock has been rewarded. So let's take that story over now to Oracle. The issue here is they're issuing a lot of bonds, so they're going to have higher interest expense. Still, their capex is going to dwarf that interest expense, but they are trying to compete with the Amazons of the world. And this AI story is bigger than all of us. And Oracle is going to be a key player in supporting all of this infrastructure with the cloud. So yes, we're going to have earnings on December 8th. Hopefully management will fill in the blanks, but I think we need to take a longer term view here. Remember, they are in good standing with the Trump administration. They are playing into that $500 billion investment when it comes to AI. They're supposed to manage the TikTok algorithm. So let's take a step back here and look at the longer term picture for Oracle. And full disclosure, I am a long-term shareholder.
Wow, this is the show I needed here today on the holiday week. I got our Fed correspondent singing, disclosing that she owns Oracle. I'm mistakenly calling Inez Brooke. Lots going on here. Let's keep it moving to the last segment. Executives at public companies are terrified of uttering the words affordability crisis right now. I can't tell you how many times we've been getting flagged over the past week by executives because I'm calling this out. You could understand why. What CEO wants their name attached to a headline saying people can't afford to buy hot dogs, soup, soap, and healthcare? But the reality is prices for many things essential to living have increased a lot in the past year, and it's causing problems for households and businesses. Just consider this bleak stat. Almost half of Americans say it's harder to afford groceries today than it was a year ago, according to a new Axios Harris Poll survey. Let's put this to the roundtable here this morning. Is the country truly in an affordability crisis, and is there any way out? Jen, I'm coming back to you. You got the hot hand here.
Okay, well, I think it goes back to what we were talking about earlier in this conversation, which is that we are in a bifurcated economy. So if you're upper middle class or affluent, you may kind of groan a little bit like, oh, I have to pay how much for these bell peppers now? But you're able to pay it. And then there's the lower end of the spectrum, which is really feeling crunched. I think they are very much having an affordability crisis. We also look at housing. And for many middle class Americans, it is still out of reach. It's hard to get that 20% down payment in place. We need to increase supply on the market. Prices have been high. Interest rates, yes, they're coming down, but they're still high on a historical basis, keeping that monthly payment high. So again, bifurcated economy, affordability crisis, certainly for the lower end, maybe not so much for the higher end.
Larry, are you a big believer in this affordability crisis? Is it real? And if so, why aren't stocks trading lower?
Well, first of all, I do agree that there is an affordability crisis. I mean, just look at some of the facts out there. If you look at housing affordability, it's near an all-time record low. The average cost of just the average car now is over $50,000. It just went over that. To your point, you mentioned earlier about 1/3 of lower end income, homeowner or house owners, are living paycheck to paycheck, right? So you definitely see it. And obviously it has gotten the attention of the White House. Right. That's after the election, the elections we had 2 weeks ago. That was one of the big topics coming out of the exit polls. And I believe that's why you've seen some of the tariffs starting to come off on things that we need on a daily basis. Right. Cocoa, coffee, those types of things. That's one of the reasons why they floated out the idea about the 40, 50-year mortgage to at least bring down short term, the amount of money that you spend on a monthly basis. That's why he's talking about extending the health care, subsidies. I think it's for real, particularly for the lower end. One thing that you just mentioned, though, for that bifurcation, the higher end continues to benefit from all the gains in the equity market, right? They own most of the stocks that are out there, so they've been able to withstand a lot of these increases in prices.
Inez, real quick, last word to you. Has the price of your frozen pizza that I know you buy at Costco, has that gone up?
Yes, everything has gone up. Look, groceries have gone up, rent has gone up, electricity has gone up, everything. Childcare. This is why people are having less kids. This is why household formations are later in life. And then when you hear the CPI numbers, you're thinking, I'm being gaslit right now because nothing in my world has gone up just 2.5% or 3%. Everything's gone up more than that. If you ask a handyman to come and try and fix a window for you or to put in an AC, it'll cost you an arm and a leg. And yes, the affordability crisis is definitely real.
And as I can't help fix your window if it's broken, but I could help you lift that AC. I mean, just give me a ring. I mean, you know where I'm at. I mean, we're friends. We're here to help. All right, a big thank you to Larry Adam, Jennifer Schomburger, and Inez Ferre for joining the opening bid roundtable and bringing that heat. Coming up, Julie Hyman keeps the market analysis going on Market Catalyst, and yours truly will return this afternoon for an exclusive chat with HP CEO Enrique Lores as the computer and printing giant gears up for the holiday shopping rush. See you soon.